let's back all this out, parse through it. We've got Liz Peek, Fox News contributor, John Carney, ace financial journalist, and Steve Moore, host of More Money on WABC Radio and Unleash Prosperity. John Carney, so all right, what was your biggest takeaway? You heard mine. I think the end of the Phillips curve is big, right? But I also think the Fed is concerned about inflation right now, and maybe someday good news will really be good news, no matter who the president is.
I think it's great that Warsh declined to do forward projections, guidance. Even when they pressed him on it, they said, come on, you've got to give us something. It's going to drive the reporters crazy. It's going to drive analysts who have basically made their careers looking at forward guidance crazy. But it's the right thing to do because he's trying to break this vicious circle where the Fed looks for markets to see what markets are predicting, but markets are looking to the Fed to see what the Fed is predicting. We need to break that again, so as you said, so that good news can be good news again, and we're not all just guessing what the Fed's reaction function is going to be.
By the way, did you notice, Liz, I mean, this is a small thing. He didn't have a big, fat, 3-ring annotated notebook with him, carrying around, the way his predecessor did. I think he pulled a piece of paper out of his pocket, and best I could tell, that was it. So, you know, somebody knows his stuff, can do the nuances, but can communicate important messages. That's what I saw today. And I don't think he was jamming anything down anybody's throat. He was just saying, here we are, and we're going to have reforms. Right? We're going to we have these task forces. Maybe you'll be on a task force if you're unlucky.
I'm sure you will be on a task force. I thought it was just incredibly professional and very reassuring. And really the thing he said that I think should make markets happy, although perhaps they didn't, was that we are going to control inflation. And he said, and he was collegial and he was very complimentary of the welcome that he's had on the Federal Reserve Board. But he did say the Fed's been wrong for 5 years about inflation, and we're going to fix that. And I thought it was a very strong message. So maybe markets are thinking, well, okay, he is a hawk. You know, despite all Elizabeth Warren's anxiety about him being a puppet for Donald Trump, he really isn't going to be that. And I think we heard that very strongly today. So maybe the market is concerned about rate hikes going forward. I think there's zero chance of that. I think they basically sit where they are, watch the data come in. They are truly going to be data-driven, unlike Jay Powell. And so, I think markets are sort of doing a sort of fast take here. I think maybe it's wrong.
So he is a hawk, but he's a dovish hawk.
What does that mean?
He believes you can grow the economy, not mess with that. Doesn't mean all of a sudden you got to tighten policy just because productivity is high or retail sales were high. I mean, I think the market, even up to this morning's retail sales, which comes out, 8:30 in the morning, they're still doing the old model that the Fed has to tighten into good news. I think, but there's no question right now, they're in no rush to fiddle with interest rates, at least on the downside, or probably the upside. But inflation is their priority. Look, let me step back for a minute. Greenspan, and especially before him, Volcker. Right. Volcker used to make we were there. I was in the administration. Right. Volcker said to Reagan, if I get inflation and inflation fears down, expectations down, that will do more to lower interest rates and stimulate the economy. I can't artificially push him down. I've got to conquer inflation first, and then the markets will take care of the rest. I think you're seeing echoes of that. He mentioned George Shultz as a mentor down through the years. I mean, this is all a very refreshing change.
Yeah, I've been waiting 40 years for this.
Yes.
So it was very, and, I love the fact, as Liz was saying, he's very plain spoken. You remember Al Greenspan, who actually was a great Fed chairman. But remember, people would he was speaking in Greek, and everybody was trying to figure out what he was saying, and they'd study over his statements and what was he talking about. He was very clear about what he wants to do. And by the way, you've got to explain to me, Larry, and you, Liz, and you guys, why is it the markets and the investors should want an inflation hawk? Inflation is the enemy of profits, the enemy of production and higher stock values. So I think he's going to be wonderful. I think the fact that he doesn't get on the stage and try to predict everything that's going to happen in the world is fantastic. this is a moment that he's good for markets. Let's put it like that. Very good for markets, good for workers, and good for the American economy. And I think Donald Trump made an outstanding choice.
Yeah, he did. Liz is saying it could be Trump's best appointee, and you may well be right, Liz. John Carney, can he stop the yammering? I mean, this forward guidance, because he made such a very good point. The markets are worried about how the Fed will react to the numbers rather than the numbers. And that is a fool's errand if there ever was one, but that's what it's come down to.
That's right. I think, actually, to answer Steve's question as well, why did the market not like this? It's because they were foolishly expecting him to give forward guidance, to undermine the dot plot, to say, don't pay attention to that. He's against doing that. I'll give forward guidance. The dot plot is useless. It was all of those projections were made before today's meetings, and they were all based on the war continuing. The war is ending.
Right. That's exactly.
Oil prices are dropping. You should just throw away this dot plot. And actually, this strengthens Kevin Warsh's point, which is the projections are foolish because they cannot keep up with the real-time data that is coming in all the time.
I mean, as they're sitting there, you can see them in the conference room. As they're sitting there, giving their estimates of high inflation and maybe the need to tighten, there's a deal going on. At least we think there's a deal going on.
And oil prices are crashing and gas prices are crashing. Right. I think you're right. I think we are going to see negative prints on CPI.
Mike Faulkner made that case the whole third quarter. July, so I get this right, July, August, and September might see consecutive negative CPIs because of the decline of oil and gasoline.
If nothing else changes, my math is that if gasoline goes to $3.90, we will see the next print will be negative.
June?
So the June numbers in July. It's a little hard because they average the gas price over the course of the month. So, we had high gas in the beginning of the month. So if we don't see it in June, we'll definitely see it in July. But it is coming. And by the way, Treasury Secretary Scott Bessent told us that we would see negative prints. He just got the timing a little wrong because we ended up in the Iran war.
Liz, on these task forces, I'm sure we're going to volunteer you. We're just absolutely going to volunteer you. You can pick your task force. The point about data, okay, so
yeah.
A lot of the data sources today have outlived their usefulness. And that, Kevin made a remark, it was a throwaway, but it was an important throwaway, that the jobs numbers are pretty good on the third revision, which is 3 months later than they have to act. Now, that's not a small thing because we live in this souped-up, high-tech, rapid, fast economy, right? You can hardly keep up with it. The internet is so fast, and the AI is making everything faster.
Well,
why have to worry about data that's already 3 months old the day you deal with it?
As he pointed out, businesses don't do that. Businesses have real-time data, so why shouldn't the Fed? And again, it was sort of one more indication that there really is serious reform that's going to take place here, which is fantastic in my view. And in terms of the jobs information, I think all three of us have gone through these numbers month after month. They're just nonsensical. They make no sense, and yet we're all riveted on it, and the Fed is making policy on numbers that are just completely terrible. By the way, I just want to throw in one economic thing that happened today. The Conference Board came out with CEO optimism. It's way higher than it's been for some time. There are so many good things happening in the economy right now. Kevin Warsh is in a great position because he can watch this happen. If he doesn't stomp on it, which I think he won't do, and inflation begins to come down, you're talking about a really fabulous-looking dot plot out there.
The other thing that is going to drive down, I don't know if we're going to see deflation, but I do think we could get close to zero. And boy, would that be a beautiful thing. It's also, look, AI, just talk to CEOs. They are seeing incredible productivity improvements from this. And what does productivity mean? It means lower prices and lower costs. And so I think we could see an era of very stable. In fact, when you and I got started in this, Reagan and Volcker proved the Phillips curve wrong. And yet 40 years ago, Because under Reagan and Volcker, we had falling prices and an
Well, we
huge
thought we
increase
put
in-
a spike into it, but it keeps coming back
like
in the dead
Dracula.
of night. It's just like Dracula.
Right.
Listen, Volker's, Greenspan was a guy who argued productivity holds down costs and prices.
Of course, it's-
And he refused to tighten policy in the mid-90s, even though we're growing at 4%. I think we could be growing at 4% now. What's your take on this story?
4%.
4% GDP growth. Think about that.
Ooh, that's a pretty good number. I
So
would
you
think
got the
you
Atlanta
mean for
Fed.
the third quarter?
Well, yeah, the Atlanta Fed, for some reason, didn't react much to the retail sales. The retail sales were a blowout
Yeah.
today.
Yeah.
Both the top line and the core sales. The Atlanta Fed's at 3. I would think they'd be at 3.3 or 3.5. I mean, all right, so give me 3.5 to 4% growth. The oil shock had virtually no impact on the economy. The tariff shock had virtually no impact on inflation, except maybe some one-time hits, but you can't find it in the ongoing. I mean, this is a great time to be a Fed chairman. Trump is
Exactly.
giving him peace in the Middle East, lower oil prices, and business tax cuts and individual tax cuts to spur the economy.
I agree.
It's tailor-made.
You know what?
It's Trump-made.
Just stay out of the way, right?
Yeah,
Seriously, the Fed
exactly.
should stay out of
Don't
the
do
way.
anything.
If you look at the Atlanta Fed does their business inflation expectations, those tick down. So they went from 2.4 to 2.3. That's less than the inflation that they reported they experienced over the last year. So businesses think inflation is going down. They are not looking backward at the inflation we just had because of gas prices. When they look forward, they say, we don't have an inflation problem. Let's go. And I think AI is part of this, and I think the tax cuts are part of this. They think we're going to have growth without inflation. And Kevin Warsh thinks that's possible. They're not going to be fighting the Fed anymore, and that's great.
Warsh couldn't have been clear on this. I mean, we've all been Laffer and Forbes,
That's
myself,
why we were
and you
for
and
him
the
in the
others.
first
Right.
place.
We've all talked about how important it is for him to put that out right away, because he said it in his confirmation hearings in the Senate, and he did. He put it out right away. That's a sea change.
Yeah.
If market participants pick up on that, it'd be very, very important. Liz Peek, it sounds like Mr. Trump is giving him plenty of rope. He's not interfering. I mean, he said this even before.
So far.
I mean,
right.
It just sounds,
I agree.
Trump's not saying get rates down, get rates down. Actually, Trump last week with the jobs report said don't raise rates. He changed his own view or his own priority. So it sounds like, the issue of Fed independence is all withering away.
Well, I think it'll even wither away more if the economy's in a good place. And right now, it isn't just that retail sales were up. I sent you earlier the Bank of America information. The gap between the high and the low, this whole K-shaped economy, that narrowed in May. I mean, if wages and spending continue to increase on the lower end of the spectrum, what is anyone going to complain about in this economy? It's pretty good.
The bond yield is now, I'm going to call 4.5%, 10 years. By year end, it will be
4.2.
Yeah. By year end, it will be.
Yeah, I think that's about right, 4.2. Maybe lower if we get those deflationary month-over-month prints. I just want to be clear. I don't think we're going to get a year-over-year deflation print, but I do think the month-over-months are going to come down, and that will bring down the bond yields because people won't think.
By the end of September, when you get the third straight month, maybe the fourth straight month, people are going to be yelling and screaming about deflation and how interest rates have to come down. I mean, the thing just fluctuates. It's these flyover Reserve Bank presidents every time. I mean, let's end that. I mean, can he stop them from yammering?
Yeah, no.
That's a good
He doesn't really.
Because
He
there's
can't
a whole
really.
professional class of people who do that. But if he is...
They can't be replaced.
If he is right that supply is going to go up, you are going to see lower prices. You've got a whole new regime. And by the way, we're the only country in the world right now that's growing. So you have a combination of a great president, a great Fed chairman. Congress should stay out of the way.
I'm going to make a prediction, Larry. I think he's going to lead by example. No more press conferences every meeting. They used to do it every other meeting. He said today, you should only hold a press conference
If you have
when you have something to say.
Yeah,
No
I heard that
more
too.
press conferences
George
every
Schultz,
meeting.
dictum. All right. And he forgot to do his own dot plot. Anyway, Liz Peek and John Carney and Steve Moore.